2026 Tax in America. The topic of tax in the United States in 2026 is one that touch the daily lives in cultural every person and business across the 50 states and beyond. Tax in America have always been complicated that subject to continual changes in debate, refination, the shifting need of the country economics, social policy and political profile. Understanding the tax landscape for 2026 require a broad look at federal income tax rates, changes at the state level, mm, corporate tax development and influence of inflations and economic recovery factors, and the broader implications for American householder and enterprise as the new year and has donated. Millions of Americans have questions about what we own, what dedications and credit they can claim, and how adjustment inspired by lawmaker could affect their budget and financial planning. A closer in examinations of the 2026 tax environment relevels not just number and rates, but the physical and properties that guard tax law in a national continual string to balance fairness, complement and public needs. At the federal level, the United States tax system is progress, meaning that include with a higher income generally pay a larger percentage of their earning in tax than those their more modest incoming. This principle underlies the system of tax brackets, and determines ha- how much tax much protection of a person's income is subject to. Over the year, these brackets have been adjusted for influences and lawmakers. Occupations objects in brackets themselves in um, response to income, progress, or political subjects. For 2026, the tax code reflect a combination of adjustment made in preview year, as will as recent legations amid at relieving pressure on middle class families. The familiar 7 tax bracket remain with rates that range more 10% at the lowest level of taxable income to 37% at the highest. Despite the similar structure, the precise income there should that define this bracket have shift compared to preview year. This subject are designed to prevent what is known as bracket creep, where inflation pushes taxpayer how into higher tax bracket even then their real income adjusted for cost of living has not increased significantly. In addition to brackets adjustment, the standard dedications which is reduce the amount of income subject to tax has also been increased for 2026. These changes is particular meaning and taxpayer how do not items education as they reduce their taxable income directly and can result in lowest overall tax liability. Many householders find that increased standard reductions simply their tax filing and reducing the need of the need to track a lowest list of reducible expenses for those who do itemized familiar reductions such as motor garage, interstate state and local tax up to a certain limit and credible constitutions continue to play with vertical roles in determining total tax on. Another central feature of the US tax system is the earning of tax credit and directly reduce the amount of tax a taxpayer owns. And for some, credit may even result as a refund when the extended the tax liability in 2026. Some of the most scientific credits and families includes the child tax credit and earned income tax credit. The child tax credit which provide financial refill to families raising children remain to focus a policy discussions because it represent a subjectively benefit for many householder. Over recent year lawmakers have debated the size and structure of this credit with advocates advocates arguing the expenses um, to combine child properties and the citizens expenses continuation about cost and completion of 2026 liability. Families continue to benefit from this credit, although this progress amount and liability rules reflect compensations reached in recent legalistic section. Mm, the earned income tax credit is another cultural position that provide that benefit lower income working individuals and family by reducing tax liability and property central refund. This credit is included encourage employment and provide targeted